Blake. I thought maybe
Hey.
I already had a problem with the computer again. I mean, I was able to do all my stuff, but I'm saying is that's why I was working on this blank chart. But I was able to go. We did a pretty good session here with the crude oil, and we covered the Bank of Japan statement. We covered the news conference. We went over the Reuters feed, covered everything. But the system is when you froze. I think when I had it on these two extra monitors, it really did. It accentuated, or not accentuated, but it exacerbated the problem I have with that memory thing. And I just haven't had the time to go and take it. But I guess today I'm gonna have to go and take it. And hopefully they don't tie it up. If not, I'll just use. I've got a MacBook Pro, and I'll have to use that for the webinar then. If I'm stuck leaving
Wait, so tell me what the issue is. Everything seems to be working fine. I mean, from what I can tell.
Well, remember when my system would lock up, and then Kip told me I had a bad memory card or whatever it was. I had some problems, a few weeks back, and I contacted Microsoft again, and they went through the whole thing, and they said, "Hey, you got a memory issue." And so what happened was, ever since the Sunday.
I'm sorry, I can't remember what you were just saying.
Huh?
That was a bad joke. Too early in the morning. Anyway, keep going.
Okay.
Well, no one got that.
It occasionally locks up a couple of my screens. So the screen I was doing the crude oil and stuff on, it did. Although we had already finished basically the crude oil, but so I just jumped into this alternate screen, and we took a break, and then we wrapped up, and we basically covered the gold and a little bit of the S&P, and then we just now covered the 10-year note. I think I do see like a head and shoulders developing here on the 10-year note on the 4-hour right here, and we've broken that trend line here too.
Ah, yeah, good eye.
Mm-hmm.
Good eye, son.
We'll just see what happens. It actually held up really well. I was telling them that I was a buyer. I mean, I didn't tell anybody, but at 29.04. That was actually the 50%, and it just happened to confluence with some nice touches here, and we quickly jumped up to 12, and but anyway, we made it up here to 17, but we broke this trend line, and so we're coming up here. This move is at 38%. We got 24.20 or 29.20 at your is a 50%. So I don't know. I think they're having some problems here. I guess we'll have to wait to the FOMC minutes, but I don't really see anything that's going to come out of those FOMC minutes that's going to make any real difference.
Yeah, so talking about the minutes, I was just chatting with the folks in the chat room about this. There's obviously the dollar's being sold ahead of the minutes, which makes sense. I mean, we've had a lot of weak data, so people are expecting a dovish FOMC. I mean, that's going to be the natural. Everybody's thinking that. And overnight, the dollar, rejected from. I'll show you guys in a bit. Rejected from the wedge, and so we saw some dollar weakness come into the market. But I think the risks are. How about if the Fed, if the FOMC is just not as dovish as the market's expecting? And if that's the case, the dollar could very easily whip back. And, we are in the apex or in the apex of the wedge. So you got to expect these whippy type of moves when you're in an apex of any wedge, whether it's bearish, bullish, or just a triangle. But I think the risks are the Fed just doesn't seem as dovish as the market's putting out the first Fed hike out towards December. To me, that seems a little. I know you and I differ as far as timing wise on what the Fed's going to do.
Mm-hmm.
However, I still think that's a little far based on anything we've heard from Janet Yellen. Going back a couple of months where she said, once I remove patients, we're talking a couple of meetings. She hasn't said anything different from that and from there, and really hasn't changed her tone at all. And really what she says ultimately matters the most. I mean, just like Ben Bernanke, you can hear all the Fed governors, making all the commotion they want, but when ultimately it came down and it rests on the shoulders of the Fed chair, which if Janet Yellen, which everybody thinks she's just this constant dove, if the FOMC just doesn't seem as dovish and expectations start to come in a little bit, and like I said, I think they're still a little far-fetched. I would say, yeah, June rate hike probably not going to happen, realistically. But pushing it all the way out to December might be a little excessive.
Yeah,
And
I don't think
so
December. I never thought December. But I thought there was
I'm
always a
not, I'm not,
chance.
I'm
I was
not,
looking
I'm
for
not,
September.
I'm not saying you, Paul. I'm
Oh, okay.
saying, I'm saying Fed funds futures.
Oh,
Okay.
okay. Yeah.
Not talking
No,
about
but
you.
there are a lot of people now that, what's his name? The reason I'm saying that because what's his name? Jan Schatzes of Goldman Sachs.
Yeah, yeah, and again, it's general consensus. General consensus is pushed back towards the end of the year, and
Exactly.
if that, like I said, I think that's too excessively dovish, and if the Fed, doesn't seem that dovish, we are at risks of a dollar snapback, and that I think is a big risk for today. I'm not saying that's going to happen, but I've told people that are short the dollar, and I just want to give a shout out to a couple of traders in our chat room. Yesterday, late in the day, they bought the euro at 108. And whatever else they were buying.
Hmm.
Mike, we call him Beans, uh, and Beth, uh, in the chat room. They were selling some dollars late in the day yesterday,
Hmm.
and I said, I'm like, great trades, guys. Just make sure you ratchet up your stops, for the FOMC, and they're being really careful, and I think that's a really smart decision. But the good news is if the FOMC minutes are really dovish, then the dollar will break lower. We happen to be mid range in the dollar index right now, so
Yeah.
and I'll take over and go from
Okay.
there. But like I said, it's more of a general consensus. Forget the individuals. Forget who. Um, Forget the who said what for a moment, and think about the general consensus of the market. And here's the wedge of the dollar index. We rejected perfectly yesterday. This is the wedge we've had drawn for the last, oh, I don't know. We've had it drawn here for a few days. I should have known better as we were coming up here yesterday afternoon, because I'm long the Canadian. I'm like, but I'm still long the
Hmm.
Canadian. It's not a big deal to me. I'm playing more the weakness in crude, if you will. But you can see how we're mid-range in the apex,
Hmm.
and there's one of two things going to happen. I mean, we're going to drop to the channel or wedge support today in the dollar, or we're going to get a sharp reversal here, and then break the upper end of the wedge and just still stay in our range. But that really depends on how um, how dovish or potentially hawkish the FOMC minutes are based around expectations, which are expected to be dovish. So it either be dovish, very dovish, or maybe not so dovish. I assume that the Fed's going to have to cite the weaker economic data that we've seen this quarter, but to what extent? And you know, if it's not as dovish as people expect, then the dollar is going to rip back up into the upper end of its range. And remember, we are still range bound.
I think it's going to be not so dovish. The other one was the one. I mean, that's why I heard an interview, and the person was making a big deal because they took out patients. That person, well, I don't go for to say they didn't know nothing, but the reason they took out the word patients, and I told her, I said, we said that before. I go, they're going to take out that word patients. There was nothing we get around it because the hawks on the Fed, they were like a dog that takes the steak off the grill. You can pull on that steak all you want, but once that dog's got a hold of that steak, he's not going to let go. Those hawks were not going to let go without patience being taken out. So I think they'll acknowledge the weakness, but it was Yellen who came out in the press conference and just whacked, and basically what I said was started throwing tomatoes at the dollar bills on the stage. So I think that it won't come, I think they'll acknowledge the weakness, but it won't come out as dovish as everybody thinks. However, people want to play beyond that, and see it, they try and fade it on both sides or whatever. I think they're going to acknowledge the weakness, but it's not going to be as dovish as everybody thinks. It had to do with Yellen coming out there, and she gave the Hawks what they wanted. She's whatever you call it, people that agree with everything, not agree, but they allow people to go and put their 2 cents in. So she said, okay, well, let's take out the patience to keep the Hawks happy. They're not going to let go without taking out patience. And then, you know what, I'm going to give you all that, and then don't worry. I'm going to come on the stage, I'm going to whack the dollar hard. And essentially that's what she did. And that was it.
Yeah,
but that's my 2 cents.
Yeah, and again, we are range bound in the dollar. Just everybody's got to really recognize that. So, the dollar has not broken out. It hasn't broken down. I mean, if you look at this move, this is an unprecedented move over the course of the last. Let's go to the weekly charts a little bit, but easier to see. Unprecedented move over the last several months. We have to consolidate. If the dollar is to rally more, it has to consolidate. It even could quite possibly pull back, but it has to consolidate, and that's what we're doing right now. And the dollar hasn't done anything but consolidate. So I think traders are getting ahead of themselves if they're trying to play outside of the ranges right now, and trying to get too bearish or too bullish right now. And so as even you stated yesterday, it's really important that you get some profits, you take them, like for me, I'm sitting in the dollar yen, and thank God I'm still short. It's my biggest position right now.
Oh, you did still say short? That's good.
Oh yeah, I'm still short because I'm looking at more of the equity markets at this point in time because of that. But still, I'm still short the dollar yen, and it's a perfect example of something that can be very frustrating when you're in a range. Although I'm expecting a little bit lower into the range, it's still very frustrating. So if you have to be willing to take the good with the bad while you're in these ranges and deal with them. So so when you're trading the dollar, when you're profitable in your dollar longs, take some profits. You get profitable in your dollar shorts, take some profits until we breach some of these major, like if we breach this downtrend line, the dollar is going to rip, and we're going to see the euro dollar right back down to 106 to 105. And when that happens, there's no reason to really be short the euro. There's no impetus. There's no real reason. No catalyst that's going to drive it below 105 unless the ECB surprisingly expands its balance sheet, or the Fed really is starting to hike. So again, it's just range trading, and you guys gotta to adhere to the ranges.
Well, one thing I'll just finish off real quick. I'm going to chomp on your time. I think the first stop for dollar yen is going to be just barely sub 118 before we see a pop, and I think eventually we'll probably see your 115. That being said, I'm going to give my 2 cents. There's no way in hell you've been given enough props, because you were the only one the previous May that was looking for a big breakout in the dollar. The only person. And I'm not going to call someone out, but let me tell you, when we went on the way down to 110, somebody, I'm not going to say the name, very notable person, said that was the end of the fall in the euro. And you're the only one that said it's going to keep going lower, and it went sub 110. I just want to make sure that everybody's clear on that. You were the one that called it, and I remember you were the one that got short your dollar at 39.83 last June. I remember, I was there, and you basically sold the frickin' top. Anyway, I just want to put my 2 cents in. I don't think you've been given enough props across the board, because you've been on that dollar, and you've been calling that dollar since Moses crossed the desert.
Well, thanks, Paulie. Yeah,
Okay,
well,
I'll
now,
let you
now,
go.
now, now it's you're only as good as your last trade. So right now I'm underwater, my dollar Canadian. So we'll see how that works out. But I do appreciate the props. I
Have
do.
a good day. I'll see you in the chat room.
You too, Paul. All right, thanks. And good morning, traders. This is Blake Morrow. You were listening to the Morning Edge. That's nice. I don't seek for props, but when I get them, I take them, and thank you very much. That's really nice to hear, especially from somebody like Paul, who's a very, very seasoned trader. One of the reasons why, um, just so you guys know this, uh, when we had an opportunity to find a trader when Kip announced that he was going to, with his son, build an insurance company, which, his son's 23, 24 years old, and he wanted to, do something with his son, a business with his son, which, I mean, as a father, I have to, I have to respect that. It's like, man, if my son wanted to do something like that with me, I'd make it happen too. I would. Um, anyway, when Kip announced that he was going to go part-time and just trade the mornings and that was it, I was like, oh, great. Now we got to find, somebody else to uh, take his spot and do equities, during the day. But, I went a little different direction, and I looked at Paul Franco, and the reason why I did look at Paul is because he's an example of a trader who's made it, who trades. He lives and dies by the sword of the market, and is really talented at what he does. And for that reason, and but plus he's always been a real great guy, supportive. Um, is the reason why we brought him on, and he's a guy that he that's how he makes his living, guys. Um, I mean, we pay him a little bit of money for to do some contract work with us and be on our team, but make no doubt about it, the guy makes his living in the markets. Okay, and those are the type of people that you really want to be listening to, people that have done it. It's not an easy job. I spent 6 years of my career living off the markets, and before I went to Wise Trade. And Steve Bealby is very much the same. Steve, he lived off the markets for many years before we brought him in to help us here at the Wise Trade Group. And those are the people you want to listen to, because if you are of the mindset that you're in the markets because you want to get rich quick, you're just go ahead and disengage from this webinar right now. Go ahead and go to where it says file, log out, go ahead and exit, because you're not in the right place. You are not. Again, if you think that you're going to get rich really quick in the markets, go to GoToWebinar software, go to file, exit, and leave. Because that's not what we do. What we do is we make money in the markets. We try to breed consistency, discipline, and patience, because that's what you need to survive. And if you're here to make an additional income, if you're here to trade and live off the markets, hopefully we can rub off on you. Can't guarantee you that we will, but hopefully we will. And if that's what you're here to do, you're here to learn to be disciplined, to be patient, to learn how to read charts, to practice sound money management, risk assessment, you're in the right spot. Glad that you're here. Okay? But if you're here to think that you're going to make a gazillion dollars really quick, go ahead and get out of here. This is not the right place for you. Okay? All right. Because those are the type of people like Paul. He makes his living in the markets. Steve Bealby, he makes his living in the markets. Me, I'm the chief currency strategist of the Wise Trade Group. Believe me, this is no Goldman Sachs. This is no Merrill Lynch. I know plenty of people that live in my I could make 4 times the amount of money that they pay me. When I say they, the Wise Trade Group pays me, if I went and sat in a bank and did asset management. I'm going to tell you right now, I could make 4 times the amount of the money that I make here as a base salary. If I just go sit in a bank and say, hey, oh yeah, you got a couple $1,000,000? Yeah, let's go ahead and put that in this asset class. And I can go be a wealth manager, but I don't. You know why? Because I trade the markets. Because I eat from the markets. The markets is what help me do what I do from a lifestyle standpoint. Plus, I get to spend time with you guys, which is fantastic at 4:20 in the morning. Anyway, enough about that. I'm going to get off that. All right, so let's talk about this for a moment. And let's hold on one second. Shane says, hell no, it's not easy work. And Shane's one of those people. Hey, Shane, how you doing? Glad you could be here. Shane, I've met a bunch of times. He cuts from the markets, don't you, Shane? I met Shane probably a half a dozen times over the years. I still envy the fact that he had long hair at one point that I wish I could grow out, which I might attempt to do this year at some point. I might look like one of those long-haired hedge fund managers by the end of next year or end of this year. We'll find out. And Shane says, damn right, but it was work learning it. That's right. It's not easy. It's not easy. It is a lot of work learning how to trade the markets. But isn't any skill that you possess in the market, isn't anything? All right, enough about that. So let's talk about the dollar today. So like I said, the dollar, we were right here last night, and I was looking at the wedge, and I'm like, I don't think the dollar's going to break out ahead of the FOMC minutes. We were right here last night, yesterday evening, after I came back from baseball. We were like literally right here. And I was long the dollar Canadian. I'm like, I still am, by the way. I'm like, I don't think crude's going anywhere. So I'll stay long the dollar Canadian because I'm not in a huge position anyway. And of course, the dollar Canadian went down and took out stops this morning, which is no big deal. Not a big deal to me. I picked up a little bit more when it was below 124 anyway. But you can see how the dollar, it came right back into the apex. And here's the thing. The dollar, like I said, the traders are expecting a dovish FOMC minutes. Now, this is not, for those of you guys that live in Europe or in Asia, just to clarify, because a lot of Europeans, I've even seen the chief currency strategist at IG Bank go, the FOMC is meeting today. It's like, no, they're not meeting today. This is the minutes. This is the transcripts of the last meeting. So we're looking at 2 weeks in arrears, the Fed meeting, the last Fed meeting, and we're going to see what they said behind closed doors. That's basically all it is. If the FOMC minutes don't, and remember, we've been getting a string of weak data for the last month and a half, really. So if the FOMC meeting minutes come in a little bit, more hawkish than expected, okay, then if that's the case, we're going to see the dollar probably whip right back up towards 98, which would be the resistance. I believe that's the resistance that we wrote down yesterday. I'm not 100% sure, but we'll see. Now, if the minutes are dovish, there is a good chance that we can push down a little bit lower before bouncing. Obviously, we have a long way until support. Support comes in around 96, 50, 96, 30, 96 and a quarter, somewhere down here. But the market is expecting a dovish FOMC minutes. Just keep that in mind. So I'll say that again. The Fed is expected to have a dovish FOMC meeting minutes. Okay. That is what the market is expecting. The market is very much leaning on the dollar at the moment. Okay. So with that being said, that leaves us kind of right in the apex of this wedge. The good news is we could actually have an upside dollar breakout today. You know, for those of you that we're closer to the upper end of the trend line, which, hey, if the FOMC is just a little bit more hawkish, we can actually see the dollar breakout. Now the dollar, remember, the dollar response is everything but the dollar yen. The dollar yen kind of stands on its own 2 feet, if you will. So when you're talking about the dollar, you're generally speaking talking about the euro and the cable and the Canadian, the Aussie, the Kiwi, Swedish krona, Swiss franc, Norwegian krona. Those non-yen currencies tend to be the ones that are going to move today in relation to the dollar. One other thing that I wanted to point out, really sharp move up in the cable. If today was not an FOMC minutes day, I probably would fade the cable here, but the cable's up on the Dutch Shell BG Group merger or acquisition, if you will. And that has led to a euro pound breakdown, which I think the euro pound is going to continue lower. This is and I just added slightly to the euro pound this morning, just so you guys know, because we broke through the 618 here, and I have another order to actually to sell more on any bounce. So any bounce back up tier 2 resistance, I'm going to sell a little bit more, but I'm entering what I bought yesterday. So yesterday I bought the euro pound here. I bought here, and I told you I would sell more on a breakdown, which we are broken this trend line. This double top is in play. Well, it's not really in play until you get below here, but anyway, I've added a little bit to the euro pound, and like I said, I'm going to add a little bit more, and then below 72.25 I'm going to add more, as we come down back towards 71 pence. So I'm starting to trade a little bit more aggressively the euro pound. And this is actually one of those good currency pairs to really focus on a day like today if you want to stay away from the dollar, because it's going to be less influenced by what happens with the minutes. But like I said, a lot of the gross cable selling has been done ahead of the elections. Now that you're getting all the debates, you're seeing less pound bearishness, cable bearishness, but that doesn't mean that can't change depending on who it becomes a front runner. All right, anyway, I just realized what time it was. I'm going to take a little bit of a break, and when I come back, we'll go into the bias chart. So don't go anywhere. When I come back, we'll get started with the analysis. So back in a few minutes, and I'm going to go grab some more coffee myself. So when I come back, we will get through the morning analysis through all the majors. Be right back.